Royce has no opinion, I guess. Okay, yeah, there he goes. All right, that works too, Royce. Why are we doing that? It's unclear why we're doing that. Anyway, it's the Clarity Act. It has not been passed still. We're waiting on it. We've been waiting on it for a while. It's all but the ink on the pen drying. Evidently, Royce, is that what you're saying? That it's already clear? It's going to happen?
No, it's not already clear. It's already happened. The governing powers have already made a decision on what assets are commodities and what only one of the five categories is a security, and that's the stock market. Everything else is a commodity. And now basically
Gotcha.
you just make sure that you land in the right of the other four buckets.
Gotcha. You know what's funny too? I mean, to add validation to what you're saying already is that they announced this past week, within the last week, and I already talked to these guys about it. The Pantera Capitalist is going to have a brand new digital asset exchange. It's going to be its own exchange, its own market for digital. And they're not including Bitcoin as of yet, but there's a certain dynamics they have to be included in that exchange. So that's already lining up. And so
do you guys know the five categories?
No, make it clear for us in the Clarity Act.
No one reads anymore. Even with everything I do, I still have to read for you guys.
Yes.
All right.
Or recite.
No, I'm not reciting. This is all from memory, photographic memory.
Exactly.
Right? So you have digital commodities. Those are the tokens like Ethereum, Solana, and Bitcoin. Right? You have digital assets, which are like NFTs. Both of those are still governed by the CFTC. Right? So that's two. You have digital assets as securitized digital assets, which are basically the stock market, basically a one for one. They make a share stock for a share on the tokenized side. So that is a security. That's the only one that is a security. The other two, I'm not recalling the other two, but the other two are also not. They're the tokens. Basically, there's a difference between token and an actual cryptocurrency. So basically, you can make a token. That was the other ones. So USDC, USDT, those are basically digital versions of our currency, and those also count as a commodity. So one is based on the U.S. dollar or sovereign nations. One is based on like, for example, the Bitcoin, Ethereum, and Solana. That's different money. That's not based on the old fiat system, right? So that was the fourth one. That's basically it. Everything is a commodity minus the stock market.
Cool.
NFT
so the US
is not commodity now.
So USDT stands for US Donald Trump, right? Is that what that is? I did that just for Josh. He has a headache now.
Now Tether is suing you for defamation of character.
That's right.
And
It'll be huge. It'll be huge. All right, let's go ahead and do the introduction here. Mike, this is after the
that was the intro. God bless America.
Yeah. You guys had the intro. Yeah. It's time for After the Bell by Arbitrage, sponsored by USDT.
Yes,
just kidding. All right. My guests are Daniel Hopwood, top right-hand corner, ex-institutional wealth manager, boo. And we got Josh Morgan, a.k.a. The Bank, the Bankster. And we've got our founder and CEO, Royce Wells. And I'm the resident retail investor and now the silverback ape, if you will. We'll talk about AMC later. Thanks, Daniel. And I do not throw poo at my enemies, despite what people say. Maybe through a meme, I do. But not for real. And the disclosure here, we're not financial advisors, and this is not financial advice. This information provided is surely for educational and entertainment purposes only. Please always consult an investment professional before making any financial decisions, and we hope you are entertained. I don't know. What?
You were breaking up. You were Max Headroom for a minute.
What? What?
Exactly.
All right. I'm old enough. I watch Cinemax. All right. So just in case you guys thought I was 20, I'm not. Let's move on to what's going on.
No one ever thought you were when you were
Hush.
20. No one thought you were 20.
Ouch. You're right. They thought I was 10. All right, here we go. I always had the baby face. All right, here we go. Good singer, by the way. Good songwriter, too. All right, let's go on to the numbers for the day. Dow Jones and S&P 500 were basically flat, but they were just a little red, just a touch, after being green all day. The NASDAQ was down almost 0.5%. VIX, which I'm including now because I think it's going to become more and more important. The VIX is down 2% today. Crude and Brent have been up. The dollar is down to 100.93. Gold and silver up. All bonds are up. And the U.S. JPY, which I'm also including right now, Mr. Sunday Seminar, 163.15, and it's way up, and it keeps going up. Those are the numbers, the important numbers. Bitcoin has been kind of in its, I don't know, a little bit up, a little bit down. You say, Daniel, it's catching a bid. What else are you adding to the facts and figures today?
I mean, the major indices have just kind of remained range bound. I mean, S&P is a little bit stronger than the NASDAQ. Bitcoin's definitely turning, but I think kind of like what, to Josh's point, I think you maybe said this like within the last month of recording these, oil has moved 27% in 3 weeks. So it's definitely back on the fears of, the progressing war. Although I will say, when you look at the chart, it looks oddly systematically up and to the right. Like looks like it's just like algo's bidding it up. It's like a perfect line. It's kind of funny to like look at the EMAs trailing it. And then the Kospi is down 24% from its highs.
Explain Kospi for those that don't know.
It's the like Korean version of the S&P, except it's really just two stocks, which is Samsung and SK.
Right. Right.
I thought there was a pudding pop joke in there, but no.
No. And you can probably thank that to all the double and triple leveraged ETFs they have around it. So apparently, for whatever reason, Koreans love to get leveraged. And potentially now you're seeing that money flow back into Bitcoin, which is their second favorite asset.
Yeah, they love to bet. That's for sure. The Asians in general are known to really love to bet.
Whoa.
No. I'm recording. No. That's coming from actual stats, and that's coming from CNBC. It's not just me. Trust me. That there is a fever.
Can I cancel him? I just want to cancel him. I think it for my own image. I need to cancel him.
Please.
I don't know. I'm sure there's facts and figures to back it up. But I mean, I'm just repeating CNBC on this, which I don't like to do. Don't like to do.
Eastern European is a better way to say that.
What, Belarus? What are we talking about?
Absolutely.
Oh, okay. All right. You're talking about Far East. All right. Anyway.
The East Indies, yes.
There we go.
Not to be confused with the West Indies.
I don't know why that's an issue. I mean, so what? I mean, it's I still don't know what that's an issue. Anyway, let's go to let's move. Where's someone else going to? Oh yeah, Citi this past week said the Mag 7 is dead. They made an official announcement. They say the Mag 7 is dead. So I guess they'll come up with some other acronym heading into the next quarter, or maybe the final quarter of the year. I don't know. Who will be what letters will be part of the next thing. I think it was probably because
spell out something. The Magnificent Seven didn't spell out something.
Something like, and that's the thing is I think they don't want MAGA or MAG anymore anywhere close to anything. That's fine.
They're gonna get SpaceX somewhere in there, and NVIDIA.
Oh, you mean below IPO price SpaceX? Yes, and
Apple.
they're about to actually allow insiders to sell now. So that'll be interesting to see. And it also has a huge short position now on it. Now I think I heard this morning it was 17% now already. shorts coming up. So we'll have to see if that plays out, or if it's what they love to do, which is to put all this information out there. It's not true, and then it goes up. So we'll have to see. Who knows? Maybe they're trying to lure retail into shorting
close to my target.
Oh, you looked at it. Okay.
Yeah, I have a cheat sheet though.
Yes, you do. You have a cheat algorithm, actually. So let's even with this little bit of time, this short time frame. Let's go to that was market. So tech cool off or capitulation. That is the next question that Daniel has for us. Set us up for that. You're talking about hedge funds, but I got something else on that too. What's going on, Daniel?
So hedge funds have been dumping tech stocks at the fastest pace they ever have in the last decade, which is according to
since 2010 is what I heard. Go ahead.
Yeah, so it's tracking Goldman Sachs Prime Book hedge fund positioning, and I guess they've been around a lot longer than that. But so it's the fastest sell-off that hedge funds have ever had of their tech positioning, and on top of that, corporate insiders are selling at the second fastest pace they've done in the last 2 decades, and a lot of companies are currently raising debt or issuing shares on their current stock as well. And so this pattern is eerily similar to the dot-com bubble, when companies were issuing stock at super high valuations. A lot of companies were IPOing, i.e. SpaceX, potentially Anthropic. And so it begs the question if, tech is cooling off, or are we currently seeing, was this just kind of a pause in the market and we're capitulating and setting up for the next rally?
Clarity.
Well, give us some clarity, Royce. What's going on?
Clarity. Everyone knows what clarity is for, right? Everyone? No? Everyone here? No?
Tell the
stock market.
If you can tokenize your version of your shares without actually selling your shares, someone over here now owns your shares without you having to report that to the SEC or put it on anyone's thing, because those shares didn't physically move, but who owns them did. So if tech is selling off, they're repositioning on the digital side.
I thought it was a double float.
It technically is at that point, because you have the regular side and then you have the digital side.
Yep. So unless
it's not hard. Watch the
unless
money.
They're planning some other format to go triple, then we'll finally hit a ceiling sometime.
Oh no. So you also know that, and it was either Genius or Clarity. I forget which one. I think it was Genius. The Frank Dodd, is that right?
Yeah.
Dodd-Frank. Yes. Dodd-Frank does not apply. Literally, it's in there. It says, "Oh, remember how we couldn't do derivative on derivatives since 2008? That doesn't apply over here." So that they're literally saying you can't do it over here, but you can do it over here. So you can get derivatives and basically keep making a second and third market technically. For the same asset.
Yep. Sounds like somebody overextended and they need a way out.
I said nothing.
I'm saying that I'm an ape. They found they went so far selling so many shares, they need a way out to make it a
ETNs for everybody. ETNs for everybody.
If that doesn't work, we'll change it. All right. Anything else you want? Any comments there from the bankster? From what's going on?
I mean, I'll need a minute to process whatever Royce is talking about, but
sorry.
And I mean, I like, to your point, it just sounds to me like it's almost this is going to be a somehow less regulated. I mean, there's always been a secondary market. There's always been a black market. There's always been the dark, like whatever you want to call it. There's always been that secondary market. And if that's what you're saying, is they're actually just moving those funds around to have something I don't know, I guess a little bit more organized. I would assume that the market at this point, it's been going on for so long, would have been pretty organized, but I guess maybe now with the...
It's literally like level 2 and level 3, like
That's
on a
what- yes.
Bloomberg machine, right? You have the stocks that are sitting that everyone sees, and then you have who actually owns them underneath, right? And so, in this tokenization move, they're like, okay, we're going to get fractional shares. We have this many shares, they equal this many shares, and they're over here now, right? And so that means while you can't have a monopoly at the surface level, you can have a monopoly underneath the cover, because basically they don't know who the owner of the asset is. They just know that it was bought. And you don't even need dark pools at that point either, because once again, it's all being recorded, it's all being regulated, and the people who owns it knows it, and the SEC and the CFTC know who own it. But once again, it's not in the public eye. So it's happening right there. You're being mugged in front of your face. It's great.
I'm sure the SEC knows who owns it, though, at that point.
Absolutely.
They know
Because-
who owns all of these already tokenized stocks that have been going since 2020. Because I mean,
I know not 2020. It's July 1st of 2025. That's when basically the Gate Exchange stood itself up and started putting them out there. That's why the Genius Act happened. By the way, if you go back and look, they did not appear on TradingView until that date. And strangely, how Genius Act, the exact same day. I'm sorry, the day after. My bad.
Well, a lot of us apes were talking about tokenized stocks back in 2020, 2021, and those being used as leverage to extra shares, to where they could use that for the FTDs that always came up, and they could satisfy them through tokenized stocks, not actual stocks, and not location of stocks. They could do it through these tokenized stocks. So I mean, all I can say is
this is another form of an option, right? It's literally another form of an option.
swaps.
You have the right to buy the stock or claim the stock, but you don't have the responsibility of claiming it on your taxes.
I've read that a couple of times today in Daniel's excellent blog about options. And about the right versus the actual.
And so tokenization
going
is just
back
like,
to
hey, let's spend options just a little bit more.
Yeah, I just feel like it's stuff they've been doing. It's just now it's coming to fruition, or now it's actually being come to
it is. It absolutely is. They were good ideas. And again, if you own a trillion stocks underneath, and there's only a $200,000 or 200,000 share float, that you've been able to control everything from what's owned underneath throughout the course of the rest of the stock market. So, well, you do understand, Darin, because of how they're doing it.
Via swaps, by the way.
Fractional shares.
Yeah.
You can do fractional shares. So, like,
Thank you,
Robinhood's been
Robinhood,
doing that for a while, right? So you don't create more shares, you just create more owners of the same shares.
They round up to a full share, every single one. So if you have like 400,000 fractional shares, that equals to 400,000 actual one share each. Did they round up when they try to satisfy failure to delivers, et cetera, et cetera? But we don't have time to get into all that. But I mean, that was all of the theories.
I'm like, that's a rabbit hole. That's a rabbit hole.
It really is. But it's what we lived over the last 6 years. We'll move on.
Are you sure it was we? Are you sure?
I do think it was interesting. Like, just one little footnote. It was interesting that Goldman Sachs is specifically the one that threw out that word capitulation. And but at the same time, like literally at the exact same time, they're actually raising their S&P target to 8,000.
Oh, so there's hats out there.
They're either talking out of both sides of their mouth, or there's a difference of opinion between their trading desk or their strategists, because again, same organization, but they're saying two different things.
Gee, imagine that. One of those guys talking out two sides of their mouths to try to get both sides.
Are you sure which one they're talking about, the digital version or the actual version?
Yeah, who knows anymore? Or the Matrix
because they
version.
will diverge. As one fills, the other one will empty. So the next market crash, and you can quote me on this, next market crash, it will be on the actual side that we're on right now, but you'll see a huge bull market on the tokenized side. And that's just them draining the swamp to make the full conversion.
You have the upper K, that's going to be the digital. The lower K, they're going to screw and liquidate it all. I still think it's going to be
money
both.
always moves. It doesn't just stay.
Yeah, why can't it be both? I mean,
It
why
can.
has it got to empty out
maintain
from
two
one?
systems.
Yeah. All right. Well, like I said, somehow I feel like they're setting that up with these digital asset exchanges now, and they're just that's going to be another way to move into it. We'll have to see. I never have heard about the Texas exchange. I haven't checked up on that lately. That Citadel is going to be involved in to see what that's all about now. Everybody's going to have their own exchange, I guess.
Data centers. Right. You've been warned.
Yeah. You have been warned. All right. So just like the BLS survey, we have the CPI survey. Go ahead. Give us your pile of information.
So CPI came in at 3.5% last month, which is a 0.4% drop from May, since gas prices had plunged. Keyword had. I don't live in the US, but apparently they're back up. So I'll let y'all confirm that.
Yes.
Core CPI remains flat at 2.6%, and the CME, the FedWatch tool, says that the chances of a rate hike have fallen from 42% to 16%. Some of the banks still predict a rate hike this year, but originally on the news, the market seemed pretty happy with the way inflation was heading. But since we missed an episode, I think this CPI print is like 2 weeks old. Like we said earlier, oil's trading back to 84, which inevitably give it 2-3 months. It'll go back to affecting inflation. Yeah, right. So I potentially, once again, to Josh's credit, we might see some stickier inflation. Maybe it might not be so transitory as we had hoped.
I wish I could bring in a wave of Janet Yellen here. Transitory, my ass. So did you have any more to say on that, by the way?
No.
Okay. So it just so happens that when he needed it, the organization that reports this says that, inflation's good. It's going the right way. I mean, come on. That one little month of prices going down, which was probably organized, is now saying that everything's going to be fine. Everything's okay. When the Strait has been screwed since how long ever it's been. And now it's even worse because evidently we had planned something with Saudi Arabia to do an end around on the gas and the oil. And then Yemen jumped in and said, nope, you can't go this way. So now they've got 2 blockades effectively. So even the end around is no longer there. And it just seems to me like there's a lot of escalation going on if everybody's reporting what's true. Because, I mean, even as President Trump said in this last week to a reporter, well, how do you know what's going on? It's like, well, I would love to have been there and given a response that we don't know what's going on. And that's why we don't trust anything that you say, if I'm being quite honest. I mean, because there's just no way to know what's going on. We're not there. We don't see what's going on. All we get is what's been fed to us, and propaganda, as it has been since World War I. Who knows what's going on over there? And all we get is what's being fed to us. I don't want to get off on that tangent, but all that to say, CPI down 0.4%, I doubt it. All right, and that was from May, it says. So we've had June, and we're in July now, which now they're getting longer and longer, these timelines. I don't know why they're waiting a whole another month and a half to come out with this. But it's just, I don't believe it. I know you guys aren't surprised about that, but I don't.
Train.
I don't believe
Literally.
it. If you look if I go to the store and I buy things, they are still freaking expensive. They are still 3 and 4 times what they were just 4 years ago. So I just don't don't believe it. So
Just
Josh,
because
what do you got?
you got to have magnifiers does not mean that the prices are that much bigger.
I'm not there yet. I'd like to be Uncle Moneybags with the whole, what is it, what do they call it? The
I mean,
spectacle?
you can look at
Thank you,
CPI all
yes,
you want.
yes.
But if you look at what the Fed, like if we're talking specifically about like cuts and things like that, and like how the war is going to affect things, I mean, look at the PCE, which is what the Fed uses considerably more than the CPI, core or otherwise, and you can see that consumption is down. I mean, there's
has to be.
You flip on the news and and so they are categorically cutting back on spending. Now there isn't a weird uptick in, I guess you're getting kind of, I think for a while there, at early 2000, actually, God, that's probably when it was. Yeah. Early 2000s, you had like this whole minimalistic movement like that came through. I wonder if that's actually kind of a similar parallel to what we're seeing now, because you get that, I don't need things. I don't need, to buy all of, I can have just the very basics, but then you see an uptick in people actually purchasing like experiences. And that's why you're not seeing as much of a hit to like travel or hotels, or you are seeing a pretty big hit to dining, but people are still, the people that can afford the things are actually opting to buy experiences or doing things. And so if you look at the shift in the PCE, and that's what the Fed really goes like, that's their main marker or their main yardstick. And you are seeing a dramatic shift. And so you can, you harp and focus on CPI all you want, but I mean, fundamental, and if you just go to the core of the question was, is how will the war affect this? The war is the effect. It is the cause and effect of what happened with the inflation drop. It's because we got that 60-day hiatus in the war, and now we already have the answer because this topic was kind of something we were going to throw in last week. So, we've got look into the future 7 days, and now we're back to saying, oh yeah, right, gas is back up, inflation's going to follow suit.
Well, I mean, it's the issue of the week, right? Because I mean, I thought it was tariffs. Oh no, it's gas. Oh no, it's war. Oh wait a minute, it's this, and it just changes.
Have a reason? Why do we have to have a reason?
And now, after the Supreme Court ruling that he had to pay all the tariffs back, now there's they were going through the Tariff Act of 1930, which he said there was going to be a backup if this got shot down, and here it is. Now it's the Tariff Act of 1930, and they're going to use that to put 50% tariffs on certain things from Canada. So and he'll spread that out too. He'll spread the love the rest of the way too until somebody tries to sue him, etc. Which has been the whole. Anytime he's in office, he gets sued. That's kind of the way it works. So, I mean, it's just a matter of what is it? What can we use this week as the excuse for the inflation we're experiencing? So, and I don't even believe the inflation number in general. I mean, the highest it ever got was 9%.
Yeah.
I mean, come on. 9% was the highest number we got during the Biden administration. No, come on. I mean, all of these three administrations, 2 Trump, 1 Biden, we've experienced inflation like crazy. And I don't know we have a real number. Who knows what a real number is anymore? I just know that when people compare, when you look at somebody that went to Costco 5 years ago and they go pay for the same thing now and how the difference is, even at everywhere you go to buy things, and these people that show receipts from 6 years ago and then what they're paying for it now, or even 3 years ago and what they're paying for it now, it's ridiculous. And we're getting told this story that it's 3-4%. No, I don't think so. It just depends on what it is. Mortgages, by the way, speaking of inflation, mortgages were at a 11-month high at the beginning of the week this week. So there's a lot of things going up. And then they always do the opposite story. Oh, but there's a lot of inventory. And so there's a lot more applications put in for new homes because there's
Yeah,
a
no
lot
one's
more
gonna afford them.
inventory.
That's why there's more inventory.
And it's like, well, there's your K
Supply,
shape again. The
demand.
top of the K can afford these homes, while the bottom can't afford their homes and they're being foreclosed and they're losing them. The top of the K can come in and sweep them up. Anyway,
2008.
100%. 100%. Oh, by the way, this is your weekly Fred. I say weekly because I don't do it every week. The weekly Fred chart I saw that was interesting lately was the comparison of the chart of oil prices to wage prices, or wage, what people are being paid. And there's a huge diversion. Huge diversion.
Hello, they're not just going to start raising people's salaries.
Back. Yeah, it goes back to, guess what? 2008, 2000-ish time frame of what's happening now. So it's just a cycle. It's just a pattern, as we like to say here at Arbitrage.
And Arbitrage been on
100%
weekly time frame. Don't go there. Don't go there. Right.
Well, you've been saying August, September for a while now. So I mean, that's what we're staring at.
So good luck.
All right, Silverback 8 meme stock time, because Daniel brought it into this conversation. It is up like 100.
Guys, I gotta go.
Okay. All right.
I'll see if I can get back, but I gotta go right now.
All right. Big business has to happen. So I guess the three of us, we have two apes and one not ape. We can talk about meme stocks. And AMC is one of them. They had their best quarter ever in this past quarter. And that's a comparison to last year. So it's year over year best quarter, but also in other things as well. So it did go up 27%. I think if you look up at year to date, or it might be up over 100%. It was because it was down to 98 cents not too long ago. Believe me, I know. And now it touched $3 a couple of weeks ago. Now it's trying to get back up to that $3 mark. And it's because of the lineup of movies that are happening between now and then, and they feel like now it'll be a continuous run of movies that's going to continue. Like the Odyssey was hit records as well this past weekend. You said 47% this year? Okay. Interesting. So it must go back to whenever it was 98 cents. That's more than 47%. So anyway, you're asking if they can keep crushing it. Crushing is a term that I would not use, because there are, and you saw it even today. I mean,
you don't have hope for your position, Darin?
My position, I mean, whatever. They'd have to make up 98%. They'd have to go up to $100 and something bucks for me to for that. Which is a lot of people who actually have held on to it. But I do think, yes, between now and the end of 2027, it will move a lot more than $2, $2.50. And some of these guys who have hated on AMC forever actually.
Wait. What price do you need it to go to?
Do what?
What price do you need it to go to?
It'd have to go like 100, and I'd have to actually have the same amount of shares. But I mean, it's like
100 would be 4,380%.
Exactly.
So it would have to do better than SanDisk did since its IPO.
No, it did more than that back the first time it jumped when the GameStop had their big deal, because we were back down here at $2 back then too, $1 and $2, and then it did the big huge jump, and then it came back down again.
It did 1,000%.
Yeah. So anyway,
so you need
believe me, I've already sold stock, etc. over the years. So it's not like it's. I would have to get back to that point. In fact, my average is below what the cost is or what the price is right now, just because of that, just from averaging down and not having, Anyway, let's move on. This is definitely not advice for my portfolio to please buy AMC at any means. But I do think by this time next year. IMAX is doing well as well, so I think it'll hit $10 in the next 6 months. Is my opinion. If they can ever get those swaps actually out of the middle of nowhere right now, which is where they put them all, we'll see. There was a reason why we ran hand in hand with GME, because we're all in the same basket. and you talked about that even within the swap baskets, and that's where the big.
I think you mean
issue.
the meme baskets.
Well, I mean, whatever they added to them, yes, they threw them all in the same baskets, and until they're forced to actually rectify those baskets, it's going to stay there, and it will never be brought back into the market. Those shares, and there's a lot of out of U.S. transactions that have happened.
I mean, they're paying in. I mean, their net loss was still 11.4 million. They're almost $4 billion in debt. They've diluted everyone, all of the people who are still hanging on,
which is small compared to a lot of different companies that are. This $4 billion is minuscule compared to a lot of companies that their debt is, and especially if you look at this whole data center thing, that's expanded everything crazy like. But that's not much.
Compared to a company that at its core is a freaking movie theater.
Okay, well, you said you're not an ape anymore. You're no longer an ape. In fact, I'm gonna move you up to.
I could be an ape and a fundamentalist at the same time. Like, I'm not going.
You can't.
I'm not going full on quant, but at some point you kind of have to, Well, God, I almost gave you a song to sing. But at some point,
have you looked it up lately? What they have retired and what they have gotten better numbers for their future for their debt. Have you looked it up?
I will say their EPS was out of the park. Like that
it was negative. This is the first time it's positive.
It was a huge swing in the right direction.
Which is dangerous because we can actually, if we start doing dividends, they can recall every single and see who owns what. And when they start giving out those dividends, if we ever did a 1 cent dividend, there are things that have to be done for you to do that, and that includes pulling up every single share that's been out there, whether it's real share or not.
$3 stock throwing out dividends, like
it's the way that you try to pull in all the shenanigans that have happened over the past 4 years. Just because you've got if you're not an ape, you got to admit that these guys, these institutions have tried to, because of all the short money they spend into it, have tried to bankrupt this company, delist it so that they can get all that money, or they not have to spend that money. It's because you have to spend that once you actually pay for the shorts, but you don't have to spend anything. If you've spent $5 billion on shorts over 4 years, you don't have to spend it. Once it gets delisted, then that's all the reason you need is to bankrupt a company, make it go downhill so that you don't have to spend all the money that you quote spent on shorting it. That's what the game is. And it happened. They got through with GameStop, Bed Bath & Beyond, all those others. They shorted and never had to spend a dime on it. So now they're trying to do that. Yeah, and you make money on the way down too, by the way, because you're shorting it. So, I don't know. We'll have to see what happens. Well, the light will never come to light, or the dark will never come to light. We'll never know exactly the true story behind the whole thing. But there's been so much that's been totally different than other stocks. Look at the options that were out there. It was up with AMD and Apple. The number of options this last round that were out there. It's a crazy number. CNBC actually spent 10 minutes on it.
300,000 contracts.
Yeah, it's crazy. And I think it's $2.250, I think, is where they were. So, it'll be interesting to see what happens with that. We won't see until probably, because they ran out till, I forget how far they ran out. But anyway, so there's a ramp, as they say, if you ever start that ramp, which is what happened the first time AMC went crazy, is because it got started on that ramp, and then it was a squeeze because of all the different options that were out there, et cetera, et cetera. So I don't know, guys, because it's just like the BLS reports and the Fed reports and everything else reports. I don't trust what comes through because you have so many things. You get shorts that are not marked as shorts. That happens all the time. And then you have, what's it called? Where it's not counted. You short it, but it's not counted. Exceptions or something like that, which is actually, quote, legal if you have a reason, a purposeful reason for short exempts. That's it. That's a fun rabbit hole to look down, is short exempts. Look that one up. I used to look that up every week.
Do you believe in the Shrek indicator?
Oh, he's back.
Oh,
Right.
I got to pull you back in. Hang on. I got to pull you back in. Boom. We're still talking about AMC. We're still talking about AMC, but we're about to give up on that because I basically
we're still
got
talking about AMC.
Yeah.
Is it back at $1?
Oh, I'll put you over there. I got to put you over here. Hang on. Got to put Royce where he belongs. I know.
I intentionally said $1 just to see his face cringe.
Now we got two. Nah,
Guy Twitch.
it's already been there. That's the thing. It's already been to 98 cents. So I have seen that. All right, let's see if this happens here. And Josh should show up now if you're watching. Boom, there he is. All right. Okay, we're all back. So anyway, I got on my podium, which is all that Daniel wanted me to do. So I'm done with that whole diatribe. And
I'll check back in the outtakes and see what I miss.
Well, now, wait a minute. You did mention, though, the only thing you can add to it, Royce, is that it wasn't too long ago. You said that AMC has a possibility to go to $5 or something. I forget what you said.
Let me pull back.
But you said that it was on the charts that it could. It doesn't mean it will, but it had a possibility.
You don't want to know what that number is. Do you really want to know what that number is?
It doesn't matter because I'm happy with 3 because I think that's where we're going. So, I mean, it's...
So, 260 is the next mile marker. 278, 286. And then there is a huge pocket once it gets over $3. That could potentially let it get all the way up to about $30 a share.
Yeah, because the $3 is what we hit about 3 weeks ago. And then it popped back and then back up again. So I haven't looked at the Head and Shoulders, et cetera, but I mean, you know.
Yeah. No, I have cheater state machines.
You have what they call God mode.
Hey.
Anyway,
demigod.
There we go. We can't take the top. Yeah.
Yeah.
So we'll
call it Hercules. Maybe I'll call the indicator Hercules now. Yeah.
There you go. Then you got. I was going to say it has to be a Robin Williams voice. Let's go to SpaceX earnings and unlock, and that's what kind of we talked about. Did we talk about before? I think we did. Yeah, or was it? No, we actually talked at the onset of the show. So set us up, Daniel, on that one. Insiders are about to get rich. Ish.
Well, it's only lost $1 trillion in market cap. All right, so SpaceX will report earnings on August 4th.
Yep.
But the real market moving event will be the unlock on August 6th. I forget what percentage of the float it is that can potentially be sold, but at the current price, it's about 116 billion worth of stock. So that's like an additional, 10% or so of the float into the market. And right now the float's very low. It's like 4% or something. And to Darin's point that he won't believe is that currently the SpaceX short float is 32%. So the question is becoming, kind of not what will SpaceX earnings be, because just IPO'd, like what are they really going to say that'll move the needle right now? It's more of how much supply is going to be put into the market for this.
So is SpaceX Starlink too, or no? Are they not?
Yeah.
Okay. Oh, then no comment. I can't comment.
I know one thing from a personal
I had to ask
perspective
first, but no, I can't comment now. Sorry.
I'm about to switch over to Starlink because it's cheaper. Starlink is cheaper than the internet service I get right now, and I'm really have considered it over the last. That's why I keep getting emails from them now because I inquired, and I don't know. I may jump over to that. What say you, Josh?
So you're planning on supporting their earnings?
It doesn't really matter. I just want to pay less for my internet service, so it's like I don't care.
I've been there for 6 years, folks. 6 years.
Wow. Nice.
I mean, Starlink, to your point, Royce, like Starlink has been uniquely profitable lately. So it is going to I don't want to say fudge the numbers, but it's going to introduce a little bit of it's going to soften the blow of everything that's come out of SpaceX. But interesting point.
Yeah, never mind. I really can't say anything. I know stuff I can't talk about.
We shall not press.
That's why I had to confirm the link before I said anything.
Yeah, but remember, it's going out at certain percentages per time when they can sell. Insiders can. So this first round is just August the 6th, but then there's successive rounds where more people can do it, I think, because I think I put that in a 3 things earlier in the year. I just don't remember what dates or what. So yeah, I who knows what they're gonna say. I mean, they always say stuff that makes you want to do the opposite. So who knows what they're actually going to say and what's actually going to happen as far as this goes. You got
it's really going to be interesting to see how the whole August 4th and August 6th thing pans out, because you've got earnings on August 4th, and then you got a day and a half, 2 days ish to digest those numbers. So a lot of times when you get IPOs, and occasionally those particular dates will overlap. So you get an increasingly knee-jerk reaction. This one, you've got at least a day to kind of digest those. And even more importantly, you've got a day to spin those opinions. So if you get, let's say they come in and the numbers aren't exceptionally great, you've got a day to spin it. If they come in and you've got, or to soften it. If you come in and they just blow all the numbers out of the water, you've got another day to hype all of those up. Now, there's an interesting thing that there's an additional 10% of shares that are in this. If they have to stay above 30% of their IPO price for 10 consecutive trading days or 7 consecutive trading days or something like that. So if they come in, blow it out of the water, spin it for 7 extra days, there might be another 10% injected into it. So it could actually have an inverse or negative effect. I think that's what 175-ish or something like that. But it's going to be a very interesting dynamic that you don't often see, having that kind of extra day to digest things, I guess is what I'm getting at. And so we'll see how they go about spinning it, or how they go about absorbing the blow.
Is this when it's going to be announced that they're going to go ahead and move everything in one spot now? It's all going to be under SpaceX? I mean, the everything that Musk is over. I mean, who knows? Because if that happens, then I could see a jump. I mean, if he said, okay, Tesla, everything is SpaceX now, I mean, it would be very interesting to see what happens at that point.
So all you guys that are at work and have the ability to see the channel, read what I said, but don't you dare say a word. Thank you.
I haven't read it yet, so I will not be influenced by whatever was put up there.
Yeah, he can't hold water. So.
Facial at all. But yeah, anyway, we'll see. We'll see what's going on. I guess that gets us to the end here. Royce, did you have some stock that you wanted to share for after the bell, or no? For crayons or no?
Let me make sure I close that other window before. Oh, you're already focused on the other window. Good.
No, I'm not. I haven't pulled it up yet.
Good. Let me go over there.
All right. While you're doing that, I'm going to at least introduce the segment. So we're going to go to After the Bell Crayons and Charts with Royce Wells.
And let's go to that the QQQ, because it's been a while.
Here we go. Oh, I got to redo that now because you left and came back in. Hang on. So we'll get a picture of Daniel here for a second. Everybody say hi to Daniel. And then we will cover his face up with this chart.
For the camera.
Bam! He's been covered. He's been covered by QQQ. By the way, the new digital chart, or the new digital exchange, or there's news. It's going to be called IQQ. I don't know. Go ahead. What you got, Royce?
What do I got? Sure.
Yep. QQQ.
All right, we're looking at QQQ, and looks like we just had a reversal in the market, and looks like we're going back up, folks. With the next price target looking at somewhere around 719. Previously, we did see this reversal take hold of the market, and we saw around that 687 number, and it held, which we thought it would because 3 of the 4 other neighboring bands on this daily time frame said it would hold, and it did hold. And so we bounced back up earlier this week, but now we're coming back down. Basically, the number to hold is at 689. If we break under that 689, basically things are not looking good, because breaking under that 689 means we wind up at trying to hit the 661 threshold. However, if we can stay above that 689, there's nothing to say we can't be back in the 740-ish range somewhere around maybe October-ish. I'm not saying that we have perma bears that help program these indicators at arbitrage, but the forecast is currently saying, with less than a 93% certainty, that we should be going right here. So 696 should be our new floor. So that means the floor is rising. We like a rising floor, so that means we're not going there. But where we start to divert is basically if it breaks under that point, there is a good chance probably by mid-August we could see about 593. Oh, no one wants to see that. That's about a 15% correction. Hate when that happens. But we do see another forecast potentially also segmenting off, saying that we can basically make it back up to 720-ish. So if the current trend that basically is long, the origin is saying that we're in a long trend, if it can persuade the next band, 719 should be our next level of support, potentially making it where we can go higher and then try to make it here. But unfortunately, I'm seeing that these numbers are not in order, and whenever they're not in order, that means it goes back and it tries to fall. So I'm seeing at 719 we should get another reversal, and hey, we'll see where we go from there. Good luck on the cues if you're playing here. And by the way, I'm not a financial advisor. This is not financial advice. This is statistics, probability, physics, and a little bit of thermodynamics, trying to read volatility as a temperature. So good luck. But I will say one more thing. If you've never used this chart before and you see this is not a good thing. So that 593, yeah, it's predicting 593.40. That's what's driving us towards this downward trajectory, because it's bent on turning that exhausted novice band off. So good luck. Hope it doesn't end that way, but I'll see you in the credits.
So possibly back up to 720, and then possibly down to 661, and then down further to
593.40.
All right,
good
so
luck. God bless. Bye-bye.
That's right. All right, that was After the Bell Crayons and Charts with Royce Wells. Let's get back to the 4 of us. Just the 4 of us. So
nope.
Let's.
And with that, I'm taking my leave again because you guys.
Yeah, can I join you?
Right? Yeah. Yeah, absolutely.
Okay,
Come on,
thanks.
Josh.
Okay.
We left it even. If 1
yes,
1 8 left, that leaves these guys talking amongst themselves.
Yeah,
maybe they'll do a
perfect.
deep dive or something.
We only have one
yeah,
last thing to talk about. Anyway, it was Datadog, and that's going to be the pick for the next week, because I won it last week. I don't know who won this week.
Oh, you had there was actually, I don't even know Datadog. Okay.
It doesn't start till after this show. I mean, Datadog. But we went a week extra since we had to leave last week. So
Oof.
I
so
won
you
last
had it
week.
going down or going up?
Well, now I picked the channels, and you just have to see if those are right. Stop smiling there, Josh, because he's a downward dog. Is his direction?
Yoga now?
I guess
I don't
so.
want to.
I guess
see
so.
any of you guys in a downward dog position. I'm just saying.
So anyway, no, I don't either. Especially no hot yoga, please.
Lululemon pants for all of you. That's your work October bonuses.
Cover that thing up. So I had the channel between 275 or 245 to 275 is where I put the channels. If that's wrong, then you can correct that. But I have a 750 channel per, so that it is that's 30, and put the channels at 252.50 and below, 252.50 to 260, 260 to 267.50, and then 267.50 and up. So if you want to tweak those a little bit, we can. But yeah, I had no, and it's similar to what last week we had 750 channels, and it's around the same price point too, by the way, which is interesting. But
fun.
I mean, yeah, so I don't know if there's any, or 2 weeks ago, Duolingo. So getting to go first. Do you have the chart up? Let me pull that up if you've got it up. Boom.
I don't know what you're talking about. Let me turn off my cheaters though.
There it is. He's got the chart up.
There we go. I'll go back to another lifetime.
But these guys were looking at it, my partner, so I could do a strategy thing and say, okay, Josh, you get to go first, since he looked at the chart.
I mean, I don't like those channels, but
okay.
Yeah, no one likes the channels that was.
Yeah.
But
I said it could be changed, but I did my due diligence the best I could. So Josh,
that seems fair.
Josh, take the channel that you think is
275.
Therefore, so you do not whine, Josh. You get to go first, and you got closer to wherever it is you thought it was going.
Whatever channel it is, just give me the bottom one.
This is the bottom.
Downward. Yeah, that's what I was going downward too. So downward dog. So the apes are now doing downward dog at the zoo.
This is getting really weird.
Yeah. All right, so Josh,
and so to say he's a beast will be bad, right?
Yeah.
All right, so Josh, you get 252.50. Josh has 252.50 and below. I have 252.50 to 260, and
wait.
Josh,
so
what? Yep.
Okay. You said 250 and below is the channel.
252.50 and below.
Oh, weird. Okay. Yeah, fine.
And I have the next one up. 252.50 to 260 is mine. So the next two up are you guys. So go ahead, Royce, and then Daniel.
Oh, I'm gonna get the pick next. All right.
Yeah.
Why not? I'll take the one right above you. How about that?
Okay. There we go.
Whatever that is.
That is 260 to 267.50.
Did he give himself the second pick? He didn't even give himself the second pick. Is it like?
No, I already took it. I was the one right next to you.
Oh, okay.
Yeah,
so
yeah.
They're claiming the lower channels, and we're up and to the right. We're up and to the right.
I didn't know if like performance review was coming up, and he's like trying to butter you up or something.
No. I already so many points deducted already. It doesn't matter. No, but we're taking the lower channels.
He's young, isn't he? Because I'm like looking at the
Darin. No.
Shut up.
Dang, that hurts. All right.
He's throwing long distance poop at me here. All right. So let's wrap this thing up then. Are you have more things to say now that we've all picked, Royce?
Nope.
No.
I just said on the chart though.
It's IPO'd. Yeah, I forget when it IPO'd. It wasn't that long ago. I mean,
about 5 years ago.
Yeah,
6 years ago. So it has some history. It has enough history to be dangerous. So let me turn off the dashboard. But
I think this and Chubb were created by hedge funds, in my opinion.
So that guy just went. Basically, this guy's trying to convert this guy, but from the convert this guy, that means it has to make it all the way down to 231. I don't see it getting down to 231, but he just did convert this guy when he crossed under 243 for a second to turn this guy short. He didn't stay there, but it was enough to flip the switch. So now basically he's trying to the lowest he's gotten is 243.88. There is not enough room to make this guy go down much further than that. Almost all of the channel is used over here. However, this range is 231 to 276. There's still a lot to go. I mean, a ton to go in this bucket. So I'm assuming that basically if it actually gets down to 231, it's going to do a hard bounce and try to make its way back up to around that 276. But 276 is not the first mile marker. The first mile marker, if it tried to go back up, is getting back up to 264. So, Daniel, you and I picked the right range. Let's go.
I was voluntold where to go.
It depends. It depends on when the season ends and when this all happens. All right.
What's funny is that basically 264 is farther away than 231 is. So that means the odds are in their favor for the fall, but ultimately, all the larger time frames said that this recent sell-off, which has been happening since roughly the beginning of July, is easily recoverable because there's enough volatility to make it happen.
So one could surmise, not advice, but if it hits 230s, that's your buy point or your accumulation point.
I have another column that I'm not turning on.
All right. The exhaustion column.
No, the exhaustion column's on. Basically, there's a support column that basically I'll show you guys after the bell.
Right. This is after the bell. This is after the after party of the after the bell. All right. Well, we need to wrap it up anyway. Let's go ahead and get to that.
Yes, please wrap it up.
Yes, wrap it up. That's the safe thing to do.
Dog, wrap it up.
That's the safe thing to do. All right, guys. We'll see you next week. We'll see if World War III happens between now and then in the Middle East and it spreads out. We'll see. Later.
Bye.